day everyone. In this illustration I'm going to show you how I came about in taking this short position on USDJPY. As you can see, I'm in a sell trade. Currently I'm in a sell position on USDJPY within 0.1 dot size. So I'm going to illustrate to you using the supply and demand concept that I've taught you guys in the course. So for those that want real life examples, real life illustrations, this is one of the videos where you're gonna need to really listen and understand what I'll be explaining. So this short position came about after price tested a supply level on an H4 time frame. As you can see, I'm on a weekly time frame right now. So I'm going to show you how I came about taking that position. So first things first, I'm just gonna hide the trade levels for now so that you can all focus on the price. Now I'm gonna switch to my line chart, right? Once I've switched to my line chart, what I'm doing right now is I'm going to illustrate the levels that I was looking at in this current week of the yen. And for those who follow me on YouTube and for those guys in the mentorship, you already know what we were looking for on USDJPY. From our weekly mentorship video on Sunday, we were looking for bearish evidence on USDJPY, this being supported by the weakness in the dollar. So the levels that I'm gonna highlight now are gonna show you like where exactly we were looking for short position. So now when we look on the weekly chart, we can clearly see we've got this low here. We've got a low that was formed here. So I'm just gonna highlight that low because it's gonna serve a purpose later on. So this is my weekly level that I'm highlighting at the moment. So this one is coming in at 106.654. So I'm gonna highlight 106.654. Now once I've done that, I'm also gonna highlight some other significant highs and lows on the weekly chart, which is coming in at this level here. You can clearly see this level is significant, and then we've got this level here. So preferably on a weekly chart, you need to have at least 3 months worth of data that you have to look out for. So now we can clearly see on this chart also, we've got these two significant areas, this low and this high. So you can see this low is coming in on the roughly around somewhere mid-February. This low is coming in at the beginning of March. So it's quite significant. So once you've highlighted those on a weekly chart, remember, this is all adding up to the decision that made me sell the yen today. So now we're gonna go to a daily chart and take note, the black dashed line represents weekly levels. So now on a daily chart, I'm gonna grab my trend line tool. I'm gonna highlight the level that I'll be looking at on a daily chart, and preferably what you need to do here is make sure the daily levels that you are going to highlight are all encompassed in the weekly levels that you have highlighted. You want to highlight a daily level which is passed beyond, right? That's not gonna be like important in terms of your current price action. But yes, when price reaches that level, and if that level is not highlighted, you need to take note of that. So we're gonna highlight this level here, right? Once I've done that, I'm gonna change my line to, I'm gonna change it to a solid black line, and that line is coming in at 109.206. 109.206, that's the high. So now I'm gonna highlight other significant levels on a daily chart, which is coming in at this level here, and then we've got this level here. As you can see, this level is highlighting this low and this low and this consolidation area here. Can you see how this short-term higher low coincidentally coincide with this? So you must take note of that. And I'm also going to highlight this low. Okay. As you can see, all these, they are all encompassed in the weekly zone that I've highlighted. You see? So these are the significant levels on my daily chart that I'll need to take note of. There's one here. You can see this. We had a price rally to the upside. From the peak, we dropped from the low, and then we retraced 50% of the drop. We formed a higher low. So now we've got this level here, right? So we need to highlight this level. This is where probably my short trade was derived from. So now that we've done that on a daily, I'm going to go to a H4. Now, see what's interesting now on the H4. You can see we've got 1, 2. Okay, let me highlight this for you. We've got 1, 2, 3. These levels are all respecting our daily levels. So this is going to serve as your supply zone. See? So these 3 levels that I've marked, they are serving purpose of your daily supply zone or your daily bearish order blocks. Because now we are on an H4 chart, but you can see how the levels have been respected. So you can clearly see where the level here respected. Let me just zoom out a bit. Right, you can see once I've zoomed out, you can clearly see it's that higher low that I lastly highlighted that's being respected here. Price tested it, retested that level here, and then today price did the same thing. It tested that daily level. Now I'm going to switch to a candlestick chart. The moment I switch to a candlestick chart, you can clearly see now the levels that we are working with. You see, we clearly have a supply zone here, we have a supply zone here, and the entry was somewhere around this zone. As you're going to see, we're going to refine it when we go to a lower time frame. So I'm going to go straight to a hourly chart. So remember, this is our supply zone. This is our daily supply zone, right? The gray shaded area, that's our daily supply zone. That is the area where you will be looking for short trades, because you expect that level to hold. As you can see, we've got a daily supply zone and also a weekly supply zone. Remember, the dashed line represents a weekly zone, the solid black line represents a daily level. So once price hit this area, that's when I started hunting for short trades. So now I'm going to go to a 30-minute time frame. You can see that this area here, this is where my short trade is. I think somewhere around here. I'm going to show you the levels now. It's coming in during the New York session, where they rally during the London session. You see, London session, price rallied massively into the supply zone. Yes, some are going to say, but Ivan, you'd have missed this rally to the upside. Yes, I would have missed that because that is not what I was looking for in USDJPY. I'm looking to be bearish in the current week. This being supported by a weak dollar. As you can see, dollar also crashed yesterday and today. So I was expecting yen at some point to give a valid signal to go to the downside. So now on a 30-minute time frame, you can clearly see price came back into this supply zone, our daily supply zone. There was a first test here. This would have been also a good trade to the downside. Then the second test of a level, another good entry to the downside. You see? So now me, I was like, no, I need to wait for a third retest and hunt for a stop hunt. Once I've seen this candle on 15-minute time frame spike and close below, that was my trigger. So now I'm gonna go to a 15-minute time frame. You see this candle here, and for those who have taken my Japanese candlestick course, you know already this candlestick. I've explained it in detail. It took out this high. There was liquidity there. You see, there was buy side liquidity up here. Took out the high, close below. Now let me put back my trade levels so that you can see exactly where my entry was. So my entry was here. This is where my entry level was, and then the rest you can all see price did push all the way to the downside. That was almost like 20 pips. You see, guaranteed 20 pips. I just went with a 0.1 lot size so that I can illustrate this to you guys. You see, something realistic to everyone out there. I don't want to be going in with the 10 lot size, 5 lot sizes, whereby we know that most of us retail traders, we don't have that much equity to support those kind of lot sizes. We need to be realistic, guys. So I went in with a 0.1 for illustrating purpose to you guys. So now what I'm gonna do now, as you can see, my stop loss is up here. There's like 23 pips stop loss, and price has already moved like 20 pips into my direction. So I'm gonna move my stop loss right below my, like 5 pips below my entry to the downside. You see, I'm trailing the trade because I'm expecting yen to drop down to at least 107.25. I'm expecting yen to take out the liquidity down here. Once I've done that, right, now I'm gonna go on to the trade itself. I'm gonna take off. I've been introducing this to most of you guys. I'm gonna take off half of the position, meaning 0.1. I'm gonna take off 0.05, right, of the current drop to the downside. That means I'm gonna take out say, currently it's what, 15 pips. I'm gonna take off 15 pips off the trade with a 0.05 lot size. Then I'm gonna close that position. That means I've got a 0.05 position left running. You see, this is how you grow your account, guys, so that if the inevitable does happen that price spikes my trail stop, at least I would have got something into my equity. You see, so this 0.05, I'm just gonna leave it running as long as it can. See, if my trail stop is hit, so yes, it would have been hit, but already I've taken off some position off the table. That's how you grow your equity. So now you can clearly see now the red arrow represents my entry to the downside, which I took roughly around 16 4 GMT plus 2. So that's right into New York Open. Just an hour or so into New York Open my time, and price did drop, and it gave another entry to the downside. You can see where they retest here, which was a very good entry to the downside. So for the guys in the mentorship and my Udemy course students, I'm going to be showing you these trade examples in the coming week as I take the trades. I wish you good luck and happy trading. Thank you.